Good evening. This is the Elliott wave update for the S&P 500 for Sunday, November 28th, 2021. First of all, I hope everybody had a great Thanksgiving holiday. And as I left off on Tuesday's update, actually, the S&P was still heading higher in a corrective minor wave 2. That remained the case during the Globex session Wednesday to Thursday. We saw the S&P reach a high at 4717, and that seemed to put the completion point in for that minor wave 2. Having said that, that then led us to the beginning stages of a minor third wave. And what it also, that decline that we had on Friday, in addition to what we already saw, is going to allow me to put in another marker above this minor wave 5, and that's going to be the intermediate wave 5. And the reason I'm doing that is because as I track each move down, it ups the depth. So in other words, as we get deeper into the correction, I can add another degree, which will then open up additional downside and negate upside counts that have remained in place while the market goes through these beginning phases. Because as we've already seen, the ability for the market to just turn itself around, shrug off everything that's happened and move to new all-time highs while basically being built on air and hope and a little bit of prayer before a reality check gets put into place. So that's what we saw again. We saw an initial 5 down, then we had a beautiful 3 up. The minor wave 2 did go a bit higher than what I would have expected. I would not have expected it to go breaking back above as much above 4,700 as it did. I thought a nice simple ABC would have been better, holding it below 4,700. But nonetheless, who am I? The market goes up, reaches its high, and then still starts to come off in an additional 5 waves. Now, remember that I was looking for an initial 5 down to give me confirmation that those highs, at least up to that minor degree, were beginning to be put in. And so I got my first 5 down, and that was on the hourly chart. Now I've got the second 5 down. Now, yes, it could be A, B, C, and what we're seeing could be the kickoff phase for them just standing here and just keep buying, keep buying, keep buying, keep buying, keep buying. And that I cannot discount. I cannot turn in and of itself. But if it's going to be a minute wave 2 or just a wave 2 correction, wave 2s are like B waves, they're deceptive. Wave 2s have also been described as a reversal in the market, a quick reversal in the market. And that's kind of what we're seeing. Don't forget, this was Friday's closing lows. And now we're up $60, $50, excuse me. 35 now, but they had clocks put some in off of that low into to the belt. So what we're seeing is some pretty good strength coming walking back in the market. And there's nothing that they really could go on. Now, some news here and there, but the Asian markets are going to start to open. So everybody's going to get to give their reaction to how they were left on Friday's close. But other markets are going to be reacting to the renewed problems that are now being shifted or are being realized, or what are we going to do, or how severe is this new Omicron outbreak, this new variant? How dangerous is it? How widespread is it? They're already finding it within Europe. There's already talk about reissuing lockdown orders in several of the European countries, and so possibly as a whole European bloc. We're seeing rumblings from different places. How that's all going to be received and what's that going to do to the fragility of possibly what the economy is being told. We're strong, 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 but it's like, really, how strong are we? that we're going to be able to withstand another serious outbreak as we move into the winter months of a pandemic that we keep thinking we have control over, we as a global community, that this has been able to be isolated, controlled, and vaccinations, et cetera, et cetera. So all the unknowns. But in the meantime, it is pretty evident to me that what's really going on is that the market came out, or the S&P or traders came out of Friday's expiration too short. Friday's expiration, Friday's close, too short. And now they're just getting neutral. They're just buying those deltas back because they don't want to be this short. If you're showing up that you're short from 45.93 and we're trading at 46.33, how short do you want to be? How much more pain do you want to take? So I think that's what we're seeing. Now, having said that, what are the possibilities here? Again, a wave 2 should be an ABC structure. So it's going to be 3 waves, A, B, C. Right now, we're buffeting at just above the 0.382 retracement level, right? So it's a wave 2, it's correcting wave 1. So the first level, it's now sitting at and has slightly exceeded. And that's at 4630.79 or 4631. And we've obviously gotten up to 33, almost 34. So the next up would be 4647. Right above that, we have the hourly 50 moving average, and that's at 46.55. Again, resistance. Next up would be 46.63. So these are all viable, realistic levels, because don't forget, they're not done with this mindset of we're still bullish, we're still bullish. Even though that may be the way it's being interpreted, I think that, again, we need to put things into perspective, and that what is the bullishness? The bullishness is coming via option trading. Option traders, they're pushing, and the resulting hedge on the trades that they're pushing are that they have to buy stock. So there'll be market makers or just traders are buying puts. You buy puts, you buy stock. Or if they're selling puts because they want to sell premium, and the market makers in the individual stocks are having to buy the puts, their hedge is buy the stock. So again, that's what could continue to force the market if the trades are lining up in that direction where it's buy the underlying. So in any case, that really doesn't have too much of a play, other than I don't get all wrapped up in that what's the bullish scenario, because I would have a hard time finding it, but the news sources won't. So that's why I prefer to stay in the Elliott and the Fibonacci basis and say I'm correcting wave 1. So what's the max? I know from Elliott rules that wave 2 cannot break above the starting point of wave 1. That starting point is 4,717. That's where it can't break. It certainly can go up and challenge it, which suggests we're going to start moving back up. Look at this. The hourly 4 and the hourly 8 are now beginning to hook. The 20 is going flat. The market's up $36. So it does have an effect. It does technically start to tell us. So if we forget about all the other things and just concentrate on the technical, that's what many of the algorithms are going to go on. So we're just here to trade. We're trading the volatility in the technical side of the market. What are the possibilities? We can run up to 46.76. We could run up. If we break 47.17, that negates this count, that leaves this as a 3 waves down, which again takes maybe some of this away as we go up one more time. And that would be on a minor level, I think, to complete this minor 5. And that likely would have to take away this minute 5. So we'd have to back things up, but it is possible. Remember, markets are fluid. So it's not a matter of being right or wrong. It's a matter of trading what's in front of you and being able to understand what's going to propel this type of a move. And I prefer to look at it technically. That's going to, when I see it starting to rise, you're going to be more interested in buying it than I am going to be interested in selling it. So I'm trying to just pass on now that, yes, I may have an overall bearish view because I think the market's going to correct. I think that we're going to have additional stronger downside until proven otherwise. Ultimately, it always ends up being the market that's going to tell me. So if we start to break, I'm not going to consider myself wrong. I will have already participated all the way up trading wise. So that's why I'm now going to present both sides of this coin called the S&P. Upside, I do think will continue. Again, we may see some serious downside. So I think the volatility is going to remain. The market will move pretty freely to both sides. As shorts are covered and longs are then, profits are taken, et cetera, et cetera. So we upside, we have next resistance at 46, 47, 46, 55, right in that zone. Then we have 63 to 75 right in that zone. And then we have 47.08, and then of course 17. Now, if the market can literally in a day and a half, or actually one whole session, well, actually maybe not a whole session, 2 sessions, get itself back up here, I think that one day, if the S&P I think was down $80 or $90, I can certainly take it back. At least I think to 46, 43, and that puts us up into that zone. That's where it all started. That's where the heaviness started on Friday. So in 3 hours, we dropped from 45, 70, we're going to call it 77. From 43 to 77, we dropped, pretty good. We dropped 66 points. So it's like, $67. It's like, it's a pretty good drop. Very tradable. Can we go back up that much? Sure can. They're just technically trading and they're just covering. That's the part. So I don't want to get caught in that. So I'm not going to try to pick a top, nor like try to pick a bottom. I'm going to continue to trade it accordingly to what my moving averages and my Elliott and the Fibonacci are suggesting. So for tomorrow, I do expect additional upside, but that may happen overnight before we all get in there tomorrow morning. If it does, and we're starting to head lower, again, I'm going to be playing it against where the moving averages are and what's breaking. And then if it breaks below 45.7750, which is the low thus far from Friday, then I am looking for that the market is resuming, dropping in a third, so a minute 3 of a minor 3. So we'll be confronting a 3 of 3 move. There should be acceleration to the downside. It should be very steady to the downside. And we're going to see the larger slides to the downside. Right now, we're seeing them to the upside. So it would be the opposite. That's where we're going to see everything change and it's just going to fall. Then we have support once we break 45.77 and then 45.57, we have 4,500 and 44.43. And you can continue to move down all the way down to 4,400. Then we get a bit of a gap. So if it breaks all the way below 4,400, good night, nurse, we're heading down to 42.60. That would be my take if downside begins. Upside, we've also got the story. We've got if it's going to break, it's sitting right at the 20. If it's going to hold or fool around up here, which it is, then we still have to leave in, we've got support there, but we got to keep 46.50, 46.47 to 46.55 in line. Again, ABC up, that would be wave 2. Wave 2 has potential to go higher. We have our resistance. This is where I'm going to leave it. Our next update will be on Monday, the 29th.